James Demmert, founder and chief investment officer at Main Street Research. Welcome back to the show, James.
Good to see you, Tom.
All right. So before we get into a discussion about Palantir, I just wanted to get your take here on the equity market as a whole, as we're at or near all-time highs here and the optimism's kind of reigning supreme. What are your thoughts here? Are we going to continue this rally into the end of the year, James?
Yeah, I think we will. There are a lot of investors who haven't been in the market, and a lot of them were getting out prior to the election. Common election mistake. And now what they're doing is they're saying, oh my goodness, I got to get in, I got FOMO. And we think that leads equities to continue to go up through the end of the year, in this Santa Claus rally. So we think it's got a lot of momentum. There's cash on the sidelines that should have been in, needs to get in by year end, particularly when it comes to the institutional investors. So we think there's power here. We think it'll be led, certainly continue to be led by earnings. We expect the Fed, I'm not sure they should, but I think they are going to cut in December, and that should be further fuel to get us into the end of the year.
Yeah, when you talk about that, James, I think everybody's been waiting for, those pullbacks. We had one at the beginning of August. We had a slight one at the beginning of September. Quickly scooped up at this point. There's a lot of cash on the sidelines from what I'm reading, $5, $6, $7 trillion. That's lending the support here because valuations moving forward, getting pretty stretched on a historical basis, but that's not causing any headwinds at this point, right?
Yeah, it's not. And I think every time that valuations appear to be too expensive, the earnings continue to roll upward, sort of bringing PEs back into line. Keep in mind, the equally weighted index of stocks is at 17.5 times earnings. That is not historically expensive. Of course, when you throw the Mag 7 in, I love that chart, by the way, you see a magnification of the index itself as far as PE, but the average stock is still reasonably priced. Investors should be aware of that.
Yeah, and we've seen that broadening out of this rally, and that's probably helped lend more support to it. NASDAQ was underperforming, now back to all-time highs here. I mean, give me your take here on the tech sector in general. We've had some broadening out there. Some of these names that led us at the beginning of 2024, paused their rallies, still at elevated levels at this point. But is that what you like to see, as an investor for maybe more considerations for the upside going into 2025 with the change in the administration?
Well, you have a couple things going on here. One is that first phase of the AI transformation. It's always in picks and shovels. That's why you had the big upside prizes in earnings for the semis. Nvidia, a good example. Right now, we're moving towards the second phase, and that is going to be the second derivative companies. I'd say software is going to be the biggest beneficiary of there, but certainly other sectors other than just communications and technology. This administration is very pro-growth, so you've got that behind the technology sector. And a company we're going to talk about today, I understand, that's going to be a big beneficiary of this administration, which is all about defense and so on. So we can chat about that.
Yeah, and Palantir up over 310% so far this year. It's the big winner. Got added to the S&P 500, so it's leading there. But there was a lot of skepticism in early 2024 last year about Palantir. Their CEO Alex Karp, he laid out his plan and his vision. Now he's starting to execute on it, right?
He sure is. And, we look at companies from a lot of different angles, in which we should talk about today. One of them is management. Alex and his team are brilliant. He put forth some big numbers earlier, let's say last year, and you're starting to see that get executed. They were one of the first and maybe best original investors in AI. They were early adapters of AI. And we think that's what's powering the stock and investors' outlook going forward, which is why the stock's gone up so much. Question is, can it keep going up? We think it can.
Yeah, exponential gains that we've seen. They just got granted the FedRAMP high authorization for more potential contracts from the U.S. government. They've already got a lot of contracts there. But, James, the way that I look at this company now is, they've already done their work on the government side of it. Now they're starting to expand their commercial side of their business. And that's where I look at it this way as a bigger growth area moving forward, right?
Absolutely. We have to think about Palantir as a company that helps enterprises, not the U.S., just U.S. government, which is obviously a huge contract, a very consistent one, particularly with this administration. But they're going to be delving into the commercial sector. 54% of their sales came from commercial. It was a huge number back in November when they reported. So we consider industries like healthcare are going to be embracing Palantir to look at disease tracking. Take the industrial sector, using Palantir to the application for supply chain management. In many ways, it's possible because they were such early adapters of AI before and much more significant than, let's say, Oracle or Salesforce. They could be, I think Mark is saying this too, possibly competing at a very high level with those companies, which are worth way more at this point than Palantir.
Yeah, so, they've got the government contracts. They keep on getting more and more authorizations. They're actually expanding to other governments across the globe. That's a benefit for them. But then also you look at it, Trump's coming into office. Is that going to be a benefit to him, with Elon Musk, kind of talking in his ear? He's a pro-AI guy. Is that going to be a benefit for Palantir moving into next year?
I think it plays well for all technology. I think it may play best with Palantir because of their focus on defense, intelligence, counterterrorism. I mean, these are Trumpisms. And I think that they're going to get a lot of support from this administration for the other reasons that you mentioned. So that should give them a tailwind as they continue to push on into these other commercial markets. The company's worth $100 billion. That's a lot of money in a short period of time. But consider the fact that Oracle's worth $500 billion. I think they're going to chip at their heels over the next couple of years, and it's going to be exciting to see.
Yeah, when you you throw in the fact that it got added to the S&P 500, that's a benefit. Now it's there's talk it just switched to the Nasdaq, so might get added to the Nasdaq 100. We're going to find out on December 13th when they actually do the reconfiguration there of the Nasdaq 100. Maybe that provides another boost here or the leg up that we're seeing. But in this space in AI, James, when you look at it as a whole, there's going to be winners, there's going to be losers. We saw it during, the dot-com era in the early 2000s on this. Are there other names in this space that you like as far as AI goes, or maybe tech in general?
We like all the picks and shovel companies, but for your viewers, that chart of the Mag 7, which was a great chart you showed earlier, I would expect a chart of the magnificent software companies in 2025 to look the same. I think that's where the beneficiaries are going to be. Palantir, ServiceNow, another great example of that. Oracle, Salesforce. I think you want to stay in those names. Those are the leaders. Those were the early adapters. Those are going to be the winners.
Yeah, and that's the whole thing that everybody's talking about now is that move and that pivot from the picks and shovels, which are still probably going to do well moving forward, the Nvidias, the AMDs, everybody that's building this stuff. But at the same time, is this that next area that everybody has to focus on is, hey, you got to monetize it. CRM's already doing it. We saw it from their earnings, right? You mentioned ServiceNow. That's a near all-time highs here. So it's going to be about monetization here moving forward, right?
That's absolutely it. And these companies don't have the high valuations that the picks and shovels Nvidias have. So here you got valuations relatively reasonable and great growth rates going forward, margin expansion into 2025, higher earnings.
Yeah, and then for the overall market, James, before we let you go, you said you're relatively bullish here moving forward. Do you tell clients, do you tell investors to kind of maybe, hey, have a little bit of money ready in case we do get some catalyst out there, some black swan event where we do maybe get that 2 to 5% pullback that everybody kind of seems to be waiting for, but that you can actually reload?
I think this is a market that investors should be fully invested in. But as we manage this portfolio, you do see some companies maybe not performing as well as others, and we like to use that weakness, those slight corrections, 2, 5. A normal correction could be 8 to 10% even. We haven't seen one of those since August. Use that to rearrange your portfolio, right? To upgrade it, let's say, to this next phase of software being the big beneficiary of AI. So I would use those kind of movements if I'm fully invested to tweak my portfolio, get it more focused. For those investors that are not fully invested, look, this is the beginning of a new bull market. We're in year 2. These things last 7 to 8 years. As you know, we say that Dow can go to 100,000, NASDAQ 50,000. You want to be fully invested here to the degree that you can take that risk.
Yep, it seems to be the momentum to the upside. It's hard to fade this at this point, even with stretcher at valuations. Great rundown for us, James. Have a good day.
You too.
All right, that's James Demmert, founder and chief investment officer, Main Street Research.